second. We just heard that closing bell, and I got to take a pause here, even after that statement, to read the numbers. You see that we are down, but really only a little bit here. The S&P falling about 0.25% from an 8-month high, keep in mind, 979, rounded up to 980 if you like. The Dow falling just about 10 points here to 90.97, and the Nasdaq, which had been the biggest gainer of the three, or the only gainer of the three all day, holds that title at the end of the trade at a gain of 0.4% at 1975.5. Now, let's get a breakdown of what drove the markets today. Suzanne O'Halloran joins us from the floor of the New York Stock Exchange. Brian Lucas set to talk treasuries at our markets desk. And still with us is Dan Brady from Entropy Capital. Also Eric Ogard from Russell Investments. Suzanne, though, let's start with you down on the floor. What was it like today? A little bit of a roller coaster ride, and we finished pretty much as we had been trading throughout the day.
That's right. You said it, Matt. We did have three forces at work that were pretty constant throughout the day. We had, of course, that disappointing consumer confidence number for July. That did decline, suggesting consumers are still worried about a lot of things, especially their jobs. We had several disappointing earnings reports from a number of sectors, including retail and energy names. And then, of course, we had the oil drop over 1%, and we had the dollar firm up a bit. So that was really what pressured stocks, and we ultimately did end, as you mentioned, little change. Some of your weaker sectors are going to be your utility and energy names. As I mentioned, oil dropped down today to the $67 level. Also, we had companies like Valero and Smith International come out with disappointing earnings and outlooks as well. Also, the better stocks are going to be your healthcare and managed care names. We talked about that with my colleague Laura Lee, or you did, Matt. She mentioned the managed care stocks especially, which had a very strong run today. Aetna, for example, had a big gain of over 11 to 12% on that upgrade from the team over at Cowen and Company. Don't forget, Aetna did cut its profit outlook just yesterday for the second time this year. So that's really, Matt, what we've been following here in terms of all the action. But nonetheless, it was a volatile session, similar to what we saw yesterday.
Suzanne, you mentioned volatility. What's the VIX telling us? We have come, obviously, to pre-Lehman, pretty normal levels recently. What do we see today?
Well, we absolutely are at normal levels, but what we have been tracking is yesterday and today we have seen volatility tick up a bit. We are really at the 25 level on the VIX index, which does measure volatility. Now, that said, the folks at Goldman Sachs just yesterday, their trading team put out a report saying that volatility should come down as we exit earnings season and ultimately as we exit this recession. But the question is, 2 days in a row, we have had economic reports and earnings reports that were not as robust as investors and traders were expecting. So thus, we had stocks seesawing back and forth, especially in the final hour of trading.